right, good morning, everybody, and welcome to TheoTRADE Chat. It's Don Kaufman here. It's bright and early, May 15th, 2024. SPOs are up this morning, although mildly higher, following the CPI, the much anticipated CPI, which you almost had to assume after yesterday's rally that this was a little bit of a foregone conclusion that we were going to rally a little bit today regardless, but we'll see how this kind of plays out. I would say to you right up front that this is not the rally we were looking for, meaning it's just not as substantial as I would have thought. Um, Again, it had nothing to do with the print. The print itself was basically, at the estimate. It depended which one. One of them actually, the month over month, came in a little bit softer. But generally speaking, the CPI print, I mean, look, we're still at 3.4%, yada, yada, yada. I think the surprising aspect to me is the bond movement. First of all, the bonds traded 231,000 contracts already this morning, which is absolutely gigantic. Um, you can see the bond volume today, just to give you a feel, the bond volume today is almost eclipsing many of the recent trading sessions. That's how substantial it really is. So there's huge activity inside of the bond market. Again, I'm a little bit maybe taken back by the fact that we only rallied 25 handles, but again, the bell hasn't gone off. So we're going to come into an open where volatility is down, the bonds are higher. Like, the signs on the screen are bullish, 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 and the dollar also had a pretty good drop. The question is, so we didn't move anywhere near what was expected, not even close. There's a $53 expected move packed into today's trading session. And as I said a moment ago, we're just nowhere near it. That unto itself kind of perplexes me. There's a lot of movement left in this market today. It doesn't matter what's going to open where right now. It really doesn't. What's important to discern is we haven't made the full-fledged move in today's trade. And again, trade has been a little bit edgy coming into this. You can see it's 200 and also 30,000 contracts trading the SPOs. Let's come to the bell this morning. Obviously, we're going to see a fairly strong advanced decline line and wildly strong ticks out of the gate, which you'll see here momentarily. So advanced decline line, I'd also be a little bit taken back if, like, there you go, positive 1600 tick. I'd also be a little taken back at the advanced decline line. There's order imbalances. Not everything is open. That's kind of unusual. 20 something seconds into a trading session, still you have stocks. I'll just give you an example here. There's some stocks that have order imbalances and are not open yet, right? So the advanced decline line, I would have assumed would have been better this morning, forcing us in a full-blown correlation. And surprisingly, that is just not there. Again, there's mornings where you guys come in here, and I think this is important. You got to say to yourself, like, hey, this is what I thought, and we didn't necessarily move, as far as I thought. So, what's coming, and this is going to be an interesting read this morning on these futures. So right out of the gate, again, we have just wildly strong ticks, as I was showing a moment ago, but just wanted to bring this up because here come the S&P futures rallying up a bit more. Amazon's actually off mildly. Okay, the energy sector's off mildly. The only reason I'm displaying those is, the energy sector is, part of the reason the advanced decline line is not, full blown 100 stocks trading on one side. Although now, okay, with everything open, you can see now everything's open. Now you can actually say, yes, we're correlated right now to the upside. So I look for, especially in trading sessions like this, I look for heavier degrees of correlation. That is that's important to me. It's important to me because I want to see if the marketplace is moving as kind of one unit, that we're not, like, lately we've been very broken, very disconnected. And again, that's when, tech rallies and the market just kind of gets dragged a little bit higher with it. I mean, there's a lot of stocks that are just not getting dragged higher with the marketplace. There's no question. But in a day where there is a major chunk of news out, clearly CPI today, I think it's incredibly important to denote that, yeah, we hit those higher degrees of correlation, and the market now is moving much more as one. There are some areas of contention in the tape this morning. As I was saying, Amazon's just, whatever. It's not a bright spot, dark spot. Amazon's basically flat. You can see Walmart flat into this. And the reason I'm looking at those is not because they're flat or down. It has to do with the consumer. So I'm just peeking around a little bit at the consumer, and I'm also a little bit again taken back that even energy is down this morning. Oil's off like a buck, but it is what it is. Again, the rally this morning is now taking us to levels that we kind of would have anticipated. Speaking of anticipated, let's cruise over here and talk about it because we're very close. Okay, my assumption for this trading session, and again, I'm pulling up here. Let me actually pull up the daily first to give everybody a quick feel. So I'll just give you my quick assumption here. My assumption is that following the CPI, that we were just going to basically tag the upper edge of the expected move. I mean, that in effect to me would seem like one of the higher probabilities. That has not played out. We didn't move again as far as I would have anticipated. So today's expected move, let's talk about the weekly expected move and then talk about today's expected move, because that is what is paramount in here. Is looking, especially when we're trading like in a correlated state, but the week is expecting like a $67 day expected move, and the day, and this again, I'm going to list this down here, is daily expected move is basically plus or minus 53 bucks. So you can see we're at a $30 move, but we have $53 of movement kind of priced in. If you're curious where I find that, I just look at like, you don't look at the expected move right now. People always ask me, where do you find it? Where do you find it? I don't look at this expected move. This expected move right now, it's kind of in motion, right? But when I say in motion, like that's what's being traded right now. But there's the substantial amount of skin in the game is from last night's, pricing, and that's, it's 53 bucks. It's much more substantial. So a 53 point move from last night would have taken us, roughly to 52.20, plus 50 takes us to what, 52.70. And the ironic, portion of this, okay, is and again, remember we're using again expected move based on so this is 52.21, obviously here plus like 50. Okay, it's SPX, not ES. And as you start to kind of look at this, where stones throw off, as I said, the upper edge of an expected move. Okay, and to me, that's one of the higher probabilities for today's trade. But even though I know right off the top of my head, like coming to literally, and I'm just going to label it's 52.90, coming to 52.90 is basically the highest probability for today's trade. And I recognize that. However, okay, I am looking at the tape and I just can't help but feel like we're struggling right now. We struggled right after that number kind of came out. You're like, where do you see the struggle in here? Okay, volatility came down. It's not subsiding anymore. Again, this rally needs to burst right here, right now, to sustain itself, right? And I'm going to make that comment until you actually see us hit, this upper edge of the expected move, which is again, you're 14 handles off of it. So this marketplace, in my opinion, needs to make a fast move up, or it could actually suffer and roll over a little bit. We have not seen any signs of two-sided trade. Let's bring up this is a 30-day 1 hour. Again, a 30-day 1 hour. There has been effectively no two-sided trade in literally 2 weeks. So here's a Wednesday, okay? But that, all right, that's the last time we saw any sell side activity is exactly 2 weeks ago to the day, right? There's been nothing, okay? You're on basically a 2 week buying binge right now. And since we've been on there, this is the kind of trade that you step back from and okay. Suffice to say, though, the entire time that we've been rallying over 2 weeks, some of the risks haven't really abated as much as I would have anticipated. One of those being the dollar. Okay, the dollar's definitely come down quite a bit. Okay, not nearly as much as I would have expected with the kind of back-to-back 2 week rally that we've seen. The bond market has definitely popped back to the upside. Again, not nearly though the rally I thought we would see inside of the bond market. So this is also going to be rather critical today. Is our bonds going to back off? To me, one of the trades that could be there for an intraday basis could be the bond market. I am going to look at our TLT here in a moment. So we've got a position in TLT. But if I'm going to fade anything, for those of you that don't speak Trader Geek, if I'm going to fade something today, it's likely not the S&Ps and it's not likely the Nasdaq. If I'm going to fade something today, to me, it might be the bonds. Okay. Because again, market's up, bonds are up. I think if the market's going to fade a little bit, these bonds, probably be one of the drivers behind that. They're not budging right now. Bond volume, it's decent. I mean, it's obviously tapering off quite a bit, but again, the tape, it's not perplexing to the fact that it's rallying. It's perplexing to the fact that it hasn't gone directly to where we would have expected it, right? And again, the S&P is very close to a high print in there. People will talk about the spiders and so forth. And the spiders trade at a slightly different level based on like dividends and so forth. But the SPX, in my opinion, would be the most effective means of looking at markets and what could be appreciated, if you will, as an all-time high. Again, I prefer to look at SPX over spiders to discern like, what is a high? And the SPX, it's home, but it's not towards that expected move yet. So slow. Okay. It really is. It's a very slow rally. The only thing that wasn't slow, okay, it kind of felt like yesterday afternoon, for those of you that actually saw this rally late in the afternoon yesterday, well, the craziest thing is there was very limited volume around it. Markets kind of meandered and then they took off to the upside in the last approximately 90 minutes of trade yesterday. Again, they always say don't ever short the dull market. I will say this, okay, the last, 2 weeks, okay, even though it's been one-sided trade, it has been dull out there. There has been just less and less volume kind of showing up. Look at the last 2 weeks of trade. All right. I mean, there's a couple of days here where we were kind of bottoming out. After that, the volume has just dropped off a cliff. Yesterday we did some size, but that's because right in that last 90 minutes to hour of trade, we actually poured some gasoline on the fire. So here the S&Ps actually go. We'll see. Again, there's not a lot of surprises in here. The surprise would be if we reversed, right? Okay. The highest probability, though, unequivocally, 52.90. So I think you have to kind of mark that on your head there, 52.90, because that is where the marketplace is. That's where the marketplace is likely headed here, right? And this is where, as Dimitri was saying, this is where you struggle to comprehend. There's no need for like, this is where when people are trying to comprehend, there's a weakening consumer, there's this. Look, there's detachments from Wall Street to Main Street, but in light of to explain a rally like of this magnitude, you don't have to look anywhere but like, people are like, well, the energy sector is not at highs. Okay. The financials actually have ripped. I'll give you that. The financials have come much further than I would have anticipated. But in light of whatever you might think, okay, it's still tech, right? It's still tech. Tech actually came back to life. Okay. NVIDIA kind of came back to life. And that's all that needs to happen to drive us to highs. So if you're looking at Microsoft, you're like, well, Microsoft is not at all-time highs and Nvidia is not at all-time highs. Yeah. However, they've come back substantially and the financials have rallied. That's enough to bring markets to, well, where they basically are. But what we in effect have here, okay, is, well, unfortunately, a handful of products that are the marketplace. And there's a lot of stuff, okay, that's not necessarily at 52-week lows, but there's a lot of stuff that has just gotten the proverbial crap beaten out of it. And that is one of the things that's like kind of shocking. But then you think to yourself, and again, Apple is the perfect, I think, explanation in this. Apple is doing, and again, I said this like last week a couple times, Apple's doing $110 billion stock buyback. $110 billion stock buyback is more, just this number is more than the market cap of 418 S&P 500 companies. Think about that for a second. So for the most part, I look at the S&P 100. I mean, we could probably look at like S&P 20. We could make a list easily of the 20 largest market caps in the S&P and be able to just note where that marketplace is in any given point in time, like S&P 20, because in reality, there's probably only about 15 companies. It's the S&P 15. There really are only about 15 companies that even make any difference right now. We look at lots of stuff. I myself, if you haven't picked up a lot on this, when you get like Gianni on, he talks about a lot of individual stocks. You get Jeff Bierman on, he talks about a lot of individual stocks, right? Even Blake will go through quite a number of stocks. Not me. I'm an index person. Okay. I grew up in the index world. So I absolutely look at broader markets. And over a lot of years, okay, I mean, you've seen some crazy stuff over a lot of years, but I don't think I've ever seen such concentration. Okay. And I've said that, by the way, the last 3 years running. There's never been such concentration, okay, into a handful of products such that in the S&P 500, the whole idea of the S&P 500 was diversification. And that is, I mean, that whole logic is gone. It's gone. By the way, things are getting a little squirrely in the S&Ps. Not to worry. Everybody just calm down. Okay. As I said, the marketplace, the highest probability has to be at 5290. But it's trading a little sketchier this morning. Let's go look at some of the volume inside of the S&Ps. Like, look, this has not been like a stellar 2 weeks of trade. It's been pretty sloptastic with a grind to the upside. That's your marketplace in a nutshell. Sloptastic with a grind to the upside. Speaking of which, that's some decent volume coming out of the woodwork over here. And I am a little surprised because there's nothing really going on. Business inventories, housing market, petroleum status report, but that's at the top of the hour. Top of the hour is business inventories and housing market. Nobody gives a crap. Nobody gives two craps about that. The CPI was the number of the day. Retail sales also was packed in there. And again, a 30-point move, okay? Again, just didn't do it for me. Didn't do it for me at all. Should have moved a lot more, in my opinion, and I think that leaves some room today for some volatility. Speaking of volatility, brief read on volatility. Okay, vol futures since the open, okay, have actually come up very, very mildly. It's notable. Okay, I'm watching it out of the corner of my eye, and that's why I wanted to bring up volatility. So there is a hint of volatility in the air. The one thing I can tell you about volatility, though, right now, and this is actually a good thing, okay? Okay, saying it is concentration of products. Anyway, the one thing I would tell you about volatility right now, after a major announcement, volatility crushes, which it did. And again, I prefer to look at volatility futures. Volatility crushes, okay? And then it's basically what happens is after volatility crushes after a major announcement, especially when we move higher, okay, volatility is like lying dead on the floor. So volatility is lying dead on the floor, okay? Any any risk that would come into this marketplace is worn then like a badge of honor, like it would uptick a little bit. And you can see this very slight uptick. Look, that doesn't mean a damn thing, not yet anyway. Okay, a little bit more of an uptick. I would say if we actually get above 1330, okay, which is about a 10-cent move in vol futures, all right, then you need to pay attention, okay, because then I think you have the makings of, and substantiating a little bit of a reversal on a trading day. We ain't there yet, okay? And I want to stress to you, I don't see a reversal in the tape right now, okay? I don't see one. You can see volatility futures, again, kind of continue just to moderate over here, but I don't see a reversal in the tape. But at the same time, I also don't see the blistering rally that I would have anticipated here. There's substantial weakening in terms of Amazon. It is a player and it is right now dragging the NQ down. Okay, you're like, that doesn't look like it's getting dragged down very much. Well, it is because Amazon is offsetting the impact, okay, of an NVIDIA, which is rallying. If NVIDIA backs off even an inch in here, it's going to be felt in NASDAQ. It's going to scare the markets a little bit. Don't scare the children. Okay. Anyway, when I was talking about the concentration of market capitalization, okay, it's not just market caps that are concentrating. I can't stress this enough, and I've stressed it many, many times, but you can't make the argument enough. No one is trading anything but like 20 major products, maybe 20 products, 15 or 20 products, okay, in S&P, including equity products, right? And you're like, well, what do you mean? Okay, I mean, nobody's trading. Like, look at the energy sector. I think we all have to agree it's a pretty big sector, okay, right? Let's take a look at its volume here today. Come on, come on. Oh, look at this crap. Doesn't even pull up. Okay, they've broken everything. That's weird. Didn't pull up. Okay, I got nothing. I got nothing. That data should have pulled. Anyway, apparently we are trading without any volume. Look at time and sales. Is that coming up? It is coming up. How could time and sales come up and this not come up? That's not supposed to work that way. Okay. We got a problem here. Anyway, oh, it's moving. Okay. Volatility is moving. NVIDIA just moved. As I said, if it even moves an inch, you're going to feel it. Okay. Anyway, what I was trying to display to you guys when I was so rudely interrupted by myself, look, NVIDIA, there's trade activity in here. Okay. You come off the beaten path just a little bit. And I'm showing you a major sector. Okay. It's doing 4,000 contracts. Okay. Legit. I've traded more contracts than that in this product in one day. All right. So legitimately, I've traded a lot more contracts than this in XLE. I used to trade XLE a lot, like back in the day, but I've traded more contracts than that in one day. There's a concentration of liquidity to the likes that no one is talking about it enough. Okay. And I don't know why the crap isn't working. Okay. No one's talking about it enough and no one understands the full implications of it. I suggest to you, the risks are huge because I may have some internet issues. Okay. Bear with me for just a moment. Okay. It's me. It's not. Looks like I'm back up. Sorry about that. I see some momentary lapse of reason in here. Yeah, it looks like I had some internet issues though, so we're good to go. Okay, everybody hear me all right? See me all right? I'm just gonna make absolutely sure we're good to go. Cool. All right. Cool. All right. Just making sure. So S&Ps are actually backing off a little bit. The number I was looking for specifically in here, we're basically at it right now. Now you should be concerned that we could actually reverse. Look, we ain't home yet, but it's kind of a funky little trading session that we're in here. Okay. And I'm just going to be very forthright in telling you, I wouldn't trade at this level right now. And when I say I wouldn't trade, I mean for position trading. And I want to be very, very clear about this. Um, oh, I gotta move around over here. Okay. Got a rough night. By the way, I have the most disgusting story ever to tell today. Okay. Crap happened last night. I couldn't even believe it. Okay, but I'll save that one for later because it might send some people running for cover. Okay, I'm not ready to I'm not ready to tell the story of last night. Uh, I am ready to tell you though. Don't have kids. It might be too late for you. Hopefully they're off the books and moved out, and there's grandkids that you can hand back. Don't do it. Okay, I can't save all of you, but if I can only save one, it's a very famous quote from an Al Bundy. Al Bundy. Okay, he was married with children. This is the crap that I grew up on. Okay. Anyway, there's no iguanas, man. I'm in the desert right now. You know, I have to say my connection right in the middle of a major city is worse than it is on the island. The only thing that ever happens on the island is you lose power. Like constantly lose power. They're not real good at like that whole power thing. You know, sometimes like a giant bird sits on a wire and literally, okay, the wire like there's also spontaneous combustible telephone poles. Like there's a telephone pole out of nowhere that just simply catches fire. That happens at least once a week on the island. The transformer just explodes and then catches the whole pole on fire, and then the pole burns and actually knocks the entire the wires down. It's awesome. If you haven't seen that before, I tell you, it's a good time. Okay, that is what we call island entertainment. Okay, Al Bundy was. He's just great. Okay. Anyway, a little bit of selling going on in the marketplace right now. Nothing though, nothing to concern yourself with just yet, because as I said to you, it's Nvidia that had just a mild slippage and bid right back up. This next few minutes though is pretty critical test. As I said to you guys earlier, like the marketplace hitting highs and it feels like it wants to back off of it. Okay. But again, I don't think it's a good trade where we are right now. Okay. And when I say I don't think it's a good trade where we are, what I mean by that is, so, look at the SPX and you're a stone's throw off cracking into this high over here. It just, that's not going to feel good. That's not going to feel good at all. Right. I'm bothered by one thing over here. So we closed at 21 yesterday. So the futures moved quite considerably after the close. Huh. All right, because that only takes us to like 75, which we basically hit that number. Okay. Yeah, this is interesting right now. Okay. There's a little bit of a battle going on, and I didn't trade in the bonds, but the bonds now look like they're going to come off. So, keep your helmets on here a little bit. Again, I just don't see us reversing off this, but you got to realize you have a major index, like portion of the index, which is down, 1.3%. But this actually goes to exactly my premise earlier. That major portion of the index energy means nothing. Okay. The biggest company in the entire energy complex, if you start looking at stuff like ExxonMobil, okay, ExxonMobil, when we look at these little phase scores, come over here to stock highlights, it's a $500 billion company, which, I mean, look, it matters, but it's the same as like sizes like Tesla. So it doesn't really matter. because you can't even compare a $500 billion company to Microsoft. It's just not even worth, the discussion, because this is a, $3.1 trillion behemoth. By the way, Apple has actually redeemed itself considerably. Apple actually now a almost $3 trillion company. I just, I still remember very clearly, talking about Apple becoming a $1 trillion market cap and being pretty shocked at that number, but 3 trillion. Okay. Again, I'm bothered by the concentration of liquidity, if anything, in here. So I'm going to go over one of the trades I did yesterday, but I can't reiterate enough. Like, I don't, okay, I want to make this clear. I don't want to trade right here. When I say I don't want to trade right here, it basically means like, look, okay, you gotta, not tradable. No, you gotta hit the expected move if I'm going to do anything, because I think this would be futility and stupid at this point to want to execute, whether it's bullish or bearish, doesn't matter. Got to hit this upper edge of the expected move. If you're going to trade on an intraday basis, that's a different story. Now, I'm talking about position trading, but generally speaking, everything on the screen showed degrees of correlation today. And if everything on the screen earlier on showed correlation, then you should kind of wait, okay, for us to hit that expected move, right? But if we don't hit the expected move, like, oh, I missed my opportunity. So what? Now, on an intraday basis, what can you do on an intraday basis? I like the bond trade, but I kind of feel like I missed it. Meaning like I wanted to short bonds. I'm not going to short them because this is called shorting into the hole. You'll hear Tony Rago use that phrase often. So I do a lot of stuff with Tony, and people probably don't know that I do a lot of stuff with Tony, but we talk constantly. Anyway, but Tony and I always talk about like shorting into the hole. That's a phrase that he uses probably a lot more than I do. You don't short into down ticks because you're just basically chasing a marketplace at that point in time, and that's not going to be good for nobody. Speaking of stuff that I do with Tony, did he get his 50 to the 26 setup? Okay, yeah, nah, didn't happen. Didn't happen. Yeah, I was just looking at almost traded to the 50 here this morning. Okay, and pulled back. Interesting. Very interesting. Some big moves. Like Nasdaq just freaking moves. Crazy moves in the NQ. In any regard, as I'm watching Nasdaq over here, just yeah, it's slow. Everything just slowed down. A little bit of sell side activity for 5 minutes, but there's not a lot of trades that I want to jump on. Speaking of trades, I wanted to jump on. So the FXI. By the way, I love this. It's down 1,500%. Okay. You too can learn to be down 1,500%. By the way, 1,500%. When you look at back ratio spreads, the FXI trade did fill yesterday, and the FXI trade is a back spread. Okay. Back spread. So in the back spread in FXI, we tighten up the number of days in here so it's a little easier to discern this. In the back spread in FXI, if you put something on for a 3-cent credit, okay, the percentages don't work because a 3-cent credit, what happens if it's a 3-cent credit and then it goes back to zero, okay? That's like losing, like, oh, it's losing everything. Here, look at this, and we'll come over here to analyze. We'll create a duplicate order. Okay. So the trade that I put on for a 3-cent credit is now trading for a 12-cent credit. So if you wanted to put the FXI trade on right now, you're going to be able to receive more credit than I did. Okay. It is a 1/3 back ratio spread, which is juicy. It's a juicy spread. Now, the valley of death in here is fairly nominal. This is something that we've got classes on, but I want you to actually see. When I say the valley of death is nominal, the valley of death, the buying power effect in here, okay, is $152, but that's not what I want you to worry about. I want you to worry about right there, the max loss, $188. Okay, that's not bad at all. It's not bad at all. $188 of risk right now in that back spread. And FXI, okay, the trade to be wildly profitable, the trade would need us to come boom down, not that far down, but the further down we go, it would be huge. So what I tried to do in FXI, I was trying to put on, okay, a bearish in-out spread, but the skew is inverted in here. So in light of that, I actually put on a back spread. And what's happened since yesterday is the product is actually here. I can show you the product since yesterday. It's pulling back a little bit, just a little bit. I mean, it's reversed actually a bit today, but the second it actually pulled back from where we put the trade on, okay, we're sitting kind of like in what we term, there's what they call the valley of death. It goes down and up. Okay, we're sitting right in the middle of the valley of death, right? And you can actually see it based on my strikes. So I sold one of the 29s, okay, and bought three of the 27s. So I sold one of those and I bought 1, 2, 3 of these. By the way, I'm hitting control and then clicking on the watch. You just hit control, left click on the bid of the 29s, hit control, left click on the ask and go 1, 2, 3. That's how you would set that up on thinkorswim. Setting it up on Tasty, okay? So as we come over to Tasty, let's actually cruise into FXI. So inside of Tasty, if I wanted to do a similar trade, okay, how do you do it in here? You just left click on the 29, okay, and then left click on the 27. And you come down here, these 27s, highlight them, okay, and change the quantity. There you go. Now it's actually 14-cent credit. So that's all you have to do, okay? And Tasty, Tasty sets it up the exact same way. 13-cent credit, reduced by, how much, the buying power reduction is, max loss, everything is actually in here, right? Good, okay? And again, it's important to know where everything is on here. Max profit, max loss, okay? Buying power effect, all of it's actually up there. So that is your FXI trade that I did yesterday. Okay. All right. onward and upward. So somebody said they're a little hard time hearing. Bear with me. So some of the settings, you're right. Okay. When I disconnected there, some of my settings kind of got crazy. They got crazy. See if it automatically adjusts now. I'm going to turn up my my volume a little bit. So I do apologize if this gets a little bit louder. There we go. My Zoom accidentally shut down on me there, so it upset the apple cart a little bit. All right, with that, questions, comments, anything about the FXI trade? Okay, so here are the S&Ps after threatening us to possibly go lower. We rebounded quite substantially. Okay, right back to highs again. We have the impending expected move in here. Trade today, and after the CPI, I couldn't believe when I kept reading, this morning and last night, it's the most important number of the entire year. Okay, it's a built-up pile of crap. The S&P's moved 20-something points on it. It was nominal. Okay, we had data coming out the other morning, like PPI, and it moved more than this to the downside and then rallied back up. But this was a very dead, kind of a announcement in here. Left a lot to be desired. Not happy, with some of the results. Not because we're to the upside though, but because we thought we would spark, okay, a bit more volatility off of this. And that's what we're not getting. Again, I thought we'd spark some more volatility off of it. We're just not getting it. I mean, markets right now went from some of the most volatile trade that we've seen, okay, obviously on the year, some of the most volatile trade we've seen to, okay, not a hint of two-sided trade. And that's the most challenging marketplace that we deal with, is when we lose two-sided trade. Two-sided trade basically means we go up and we go down. That volatility, and that's what you want. Okay, that's what you need, because this is almost impossible to position into. When do you get in over here, right? It's kind of like don't short into the hole. You can buy into the momentum, but you're just buying into, highs and more highs, and that is a tough trade. So we're lockstep where we were just a few weeks ago in markets. Speaking of markets, I was talking again earlier about the fact that we're seeing concentrations of liquidity. I'm just looking around the screen right now. There is nothing that's trading but S&Ps and a handful of major tech stocks. There's nothing else moving, right? Boeing, which is in play, only doing 21,000 contracts in here. There's nothing moving. And apologize, I'm going to go over and look at the meme stocks. Look at like Caterpillar, which is actually up quite a bit. It's up some, what? Oh, here we are, 0.5%, $1.77. It was up a lot more earlier. I'm just showing you Caterpillar, which had a big bid and it's slipping a little bit. And the reason I'm bringing it up, it's only doing 4,000 contracts. Let's go take a quick glance, okay, at like AMC and GameStop. Okay, these were getting hit pretty hard in pre-market. And all right, there's your contract size right there. So, but doing 274,000 contracts, just want to make something clear. 274,000 contracts of a $5 product, it doesn't mean anything. Like that's like such a low nominal, amount of risk. It's what we call our notion of value. Okay, this is an afterthought. Market making firms, though, are going to love you in here. Even if it's 2 penny wide or 4 penny wide markets, think about how much money is made when you trade 200 plus thousand contracts. It's huge. And this is a market maker's like dream come true. You want to see something really, really crazy in here too? If you look at it, it's a $5 stock. The 550, which is the basically the at the monies, okay? The straddle is almost trading for $2. So it's $1.90 for the straddle. So if you bought the stock and sold the straddle, okay, you basically, and by the way, I have a buy in here, not a sell, but let me show you an interesting scenario. Go to the Analyze tab really quick in the risk profile, make sure we're cleared out. Cool. Okay, let me show you an interesting scenario in here. Buy the stock, all right? We're going to go analyze the trade, okay? And then come over here, sell the strangle, analyze the trade. I just wanted to show you what break even and everything looks like in here, okay? This is kind of an age-old trade for heavy volatility. Your break-even point in here is about 450, but your upside potential, okay, it's pretty extreme given the fact where the stock is actually trading. So talk about a return. Just take a quick glance at the strategy. Again, you're like, well, it's $200 of upside. Okay. Yeah, but what can you possibly lose? Well, if the stock goes to zero, basically, or let's say the stock goes to $3. If the stock goes to $3, okay, you lose $300. But if the stock stays completely flat, you make 200. You can't really make more than about $200 on the trade. Okay, you can lose more than that, but from a probability point of view, if you stay flat, basically make $200. If you go up, you make $200. Even if you go down, as long as you don't go down under 450, okay, you're profitable in this trade. It's an interesting trade from a probability point of view. It only really works in this kind of volatility. But here's the craziest part. That's in the next 2 days. That crap is in the next 2 days. If you look 9 days out, like if you're like an honest believer of this thing, if you look 9 days out, it's 269. So let's go over here and analyze this one, not the first one out. Here, okay, here, if you collect $2.70, so you actually buy the stock and then sell, okay, the straddle, you're collecting 271. You're making almost $3, okay, if we stay flat. If we go down, your break even is basically $4. Interesting trade, okay? Look, I'm not here to tell you, to fire into that, but from a probability perspective, the most interesting portion of the trade is that your risk reward is pretty phenomenal because you don't lose $300. So you basically, you're making $270. Where would you lose $270 on the trade? Okay. And the answer to that is you wouldn't lose that till about $2.70. Okay. That's when this is where you'd actually lose $2 and about 70 cents. So if the stock went to $2.70 right here, okay, you're a loser on the position in a risk one to be able to make one scenario. Okay, it's risk one to be able to make one. As long as the stock stays over 270 though, you're profitable. You guys decide if you like it. Okay, and remember the stock last week was trading $3. So could it crash below that? It could, but I think that from a probability point of view, you're not, it's not too bad off. That's the kind of trade that I would look for, and this wasn't there. This kind of thing wasn't there yesterday. What do you think? Do a one lot of it? Okay, I'll do a one lot of this one. So the first thing you want to do though is you want to buy the stock. Okay, and then you'd go out and actually sell the strangle. Okay, and we'll get to, well, okay, cool. Now we'll get to watch this next week. So it's the first time I've actually trade with Chuck. I traded with Chuck. So you'll get to see the AMC trade now for next week. I just did a one lot in here because I find it interesting, and that's up to you. And again, the risk in there can be substantial, but like what happens? Okay, what happens if the stock goes down dramatically? So I own the stock and I sold a put. I could end up long, like 200 shares of stock if I allowed it to get put to me, but it's all right. I mean, again, I like to show stuff that's a little bit off the beaten path in here. And this is definitely off the beaten path because it's not something that people would show you every day. Now, somebody would say like, well, how come you didn't use the $5, strike? I could have used the $5 strike. Okay. I could have used this one as well, but it's trading for 245 versus 265. The closer you are to the money, the better the trade was going to work, right? Hopefully that works. Okay. Anyway, everybody good? Everybody okay? I'm okay to go. I'm okay to go. Getting to know Schwab. So GME. So how come I didn't cover GME? Because I didn't. Well, I mean, look, I saw the same thing in GameStop, but this is a little bit more formidable because it's a $34 product. So this one you're going to have some real risk in. I figured for a $5 stock, similar kind of volatility. GME though is also in the middle of a full-blown horrendous crash. Okay, I mean it's crash worthy now. It's not back to where it was, before Roaring Kitty. I can't believe I just said that crap live. Roaring Kitty got on there. Okay, I have to wonder if he goes out. Hear me out. If he goes out, okay, we're talking about Mr. Roaring Kitty. Okay, I know he has a name. I can't use it. Okay, it's a guy that lives in his mom's basement. I got it. But if he goes out and he buys 1,000 contracts of calls, okay, in GME. Let's say he buys calls because he actually learns a little bit about the market, or he owns some stock. He then tweets, okay? He doesn't even have to say anything. His tweet was very, very cryptic. Is that actually some type of collusion in there? It's you, of course not, but that one is, it's very borderline. It's very, very borderline. Okay. And then if he owns the stock, let's say he owns stock, okay, he'd be an idiot not to go out and buy a call or buy a put and sell a call because the volatility skew in here is flipped over. So he could put a collar on for a credit. Okay, there's what they call a conversion or a reversal. And he basically could put a collar on for a credit and lock in all of his gains, anywhere up here. And he didn't know how far the stock was going to go, and you didn't know how far the stock was going to go. So if he traded calls, so be it. He made money, but he'd have to get out of them. But if he traded stock behind the trade, if he did own like a couple thousand shares or a couple million shares, whatever it might be, you could actually use a collar, offset your risk, and just holy crap, could you lock money in? Okay. But this trade, if they find out that, I think the only case they could make against him is if he actually spoke to anybody else, okay, before actually tweeting about GME, getting anybody else in on it, because then they have a case to some degree against him. I think it's going to be an interesting one though to see, but I guarantee, okay, they look at these brokerage statements. The brokerage firm is looking at them, and they have an entire, like every major brokerage firms has an entire crimes investigation department. They're required to. Okay, everything from anti-money laundering to, crimes of passion in the marketplace. This should be a crime of passion. Oh, I hate that stock. Okay. Anyway, the roaring kitty speaks again. So the meme stock craze, okay, apparently lasted. It may not be over, but looks like it lasted what, a day and a half before coming down. Continuing on. I don't like GME for the strategy I just did. Anybody actually trade that one in AMC? Okay. And look, if you didn't, that's fine. I just wanted to show you something that this is crap that I did a lot. Okay. Every time stocks would get over like 300% volatility back in the day, I would do this. Right. Believe me, I've had stocks go to zero, absolutely go to zero. But if you look at the numbers over time, the probability of going to zero is not, all that high, but that crap actually, it works over time, but you can only do it in like 300% plus implied volatility. Okay. Yeah. By the way, so why didn't I do it in GME? I didn't do it in GameStop because a $34 stock. And a $34 stock, then you have to go out and buy, 100 shares. I just try to make it more permissible for everybody else to do it. So for the most part, in doing so, I wanted to, when I say more permissible, I wanted to make sure that we didn't go out and risk $3,400 and then compound the risk by selling an additional put. So the risk would be very much amplified. Just to give you an idea how much amplified in GME. Okay. In GameStop, you buy like 100 shares of this. Watch, we'll go analyze it. Okay. Just to show you how much risk there is. Okay. Double the risk. Well, not double the risk. It's double the risk when you start selling the puts. But in GME, check this out. Donk, $18. Damn. Analyze the trade. Okay. So let's look at the risk in here. In here, okay, it's almost 10 times, the risk, right? Almost 10 times. It's instead of trading a $5 stock, you're trading a $34 stock. But for the most part, upside potential in here is about $2,000. But you need that stock above 25. Okay. But you could lose $3,000 in this. And I wanted to make sure that everybody's comfortable. And by the way, I'm not necessarily opposed to this, but where would you lose $3,000 if the stock's basically at like 15? Okay. So 15 or below. And it's not dissimilar. Like it really is some of the same setup, if you will, as AMC. Okay. I've buy and sell AMC, whatever. Like, I don't care what the symbol is, because I know somebody, of course, is going to send me an email. They're like, AMC is not a good company and they're going broke. Actually, though, they're not going to go broke because AMC went out and raised money. Okay. I mean, that's one thing to kind of quickly kind of understand over here. Somewhere in here, they'll show it. AMC is actually diluting their shares. Okay. There you go. Right here. As soon as their shares spiked, okay, they grabbed some money. Okay, 23.3 million Class A stock exchange, right, for subordinated notes. Smart. So what they basically did is they used this pump, okay, to dump and to actually raise capital. Anytime that your stock flies like that, instead of buying back shares, okay, they're basically selling more. Now they're diluting some of the shareholders, but look, it is what it is. It is what it is. S&Ps this morning, holy crap. Been on here for 50 minutes and absolutely nothing has occurred. Nothing. Earlier I was like, oh, I missed the bond trade. Oh, I wouldn't say I was missing it. It's just dead out there right now. So some of the trades that I have on, okay, a little bit of frustration here. My frustration lies in the fact that the bonds are going up a little bit. We're not dead here, okay? We're not dead here. We need to, like, what? There's a $2.30 move priced in. We need a little bit more than that, okay? But we're not dead inside of the TLT. But my frustration lies in the fact that the volatility, okay, has really died out. So it's a pretty good jump to the upside inside of the TLT. We need a pullback. Full profitability is down here at the 88 level, still totally plausible in this amount of time. Okay. One aspect worth noting here, and I will bring this up for a second. I'm sure somebody else will bring this up as well, but let me refresh the data on here. Okay. In June, there's not going to be a rate cut. This says 97%. Okay. In July, this one has changed a little bit. July is saying there's a 70% chance of no cut. By September, this is the first time they are absolutely pricing in a live cut. Look, at this point, there's a 70% chance they're going to cut now by September. Okay. November. Okay. Obviously pricing in a cut. And by December, they're now pricing in 2 cuts. I still believe, and I'm just going to throw this out here, okay, unless retail sales completely collapse, I believe that what you were just seeing on the screen is absolutely like ludicrous again. It's ludicrous. Everybody keeps saying higher for longer. Inflation ain't dead. We're still printing 3.4% in CPI. Okay, I'm really, Don's getting frustrated with the whole entire, complex here of like, they're gonna turn around and lower rates for the first time in many years. Speaking of many years, been a few days since we've been at the upper edge of the expected move, but here we are, people. Ooh, it's close. It's so close. Okay, remember, I've been saying all morning that has to be the highest probability of trade for the day. Okay, do I want to see it there? No, not really. But okay, it's the highest probability of trade for the day. The chances of a reversal are getting diminished as volatility has come down. Remember, I said like things could get very edgy right there, okay, which they did, and yet volatility starting to collapse again. So this is a less than stellar day, okay, ahead of us. We do have Jeff Bierman coming on here though in just a moment, and a day like this, it's perfect for Jeff. Why? Because when he actually is going to teach, there's not much to look at in the markets. Look, it's not totally dead today. Okay, it's not totally dead. There's still a little bit of a fade that has gone on a number of products. I, for one, am surprised that Amazon is not putting a little bit more pressure into the Nasdaq, but Nvidia is at highs right now. I mean, Nvidia is literally on its high tick, and Nvidia is very close to a little bit of a breakout to the upside. Meta kind of inching back a little bit. Apple also has got a strong bid underneath it. By the way, after all of that and Apple's crappy earnings, okay, doesn't matter. Bought back its own stock. When all else fails and you have no innovation, buy back your own crap. All right, Jeff Bierman's going to be coming on here in just about 5 minutes. He's talking about Wheel of Fortune drivers, okay, that spin the axis of market rotations, part 2. So Jeff will be on here in just a few minutes. Okay, I'm actually going to invite him in. Okay, we'll invite him in here in just a moment. So I didn't want to leave you guys hanging. I only have like 4 more minutes. So last night, this is going to be a disgusting story. Hold your ears. Hold your ears. Okay. So last night, it's end of year for my kids in school. I have 3 kids that are obviously 2 in elementary and 1 that's graduating middle school. So my daughter, who's 14, she had like a concert, a recital last night, a choir recital last night, and it was way too long. It was just me and my 9-year-old. Okay, my wife bailed, my middle boy bailed. He had homework and crap, so they bailed on me. So myself and the Zach, which is like mini me, went to the concert, and we literally got seats because we were there early. As I know a couple people there, so we went there early, and we were like front row center. And it's on a huge stage in a high school. They actually had the thing in the high school. And the last song of the entire thing, it was like an hour and about 15 minutes in. You can see people scattering off the risers and so forth. What's going on over there? And then you heard the most horrific noise, and it was it's a big kid, bigger than me, by far bigger than me in 8th grade. He blew chunks all over. At least 15, 20 people got it last night, but I was like front row center. Like it was pure like chaos. It was pandemonium. People running. I know there was a movie exactly like this. I can't even remember the name of the movie. It was right there. Several people in the audience got sick. It was absolutely out of control. I felt so bad I couldn't even record it. I started to record it and I'm like, I gotta stop. It was horrifying what I saw yesterday. Anyway, that was my night. So I'm talking to my daughter last night. I bring her back, and they had to just cut the thing at this, but they finished the last song, but there was supposed to be like an eighth grade slideshow and everything. Everybody got the hell out of there. It was every man, woman, and child for themselves. After that, anyway, my daughter gets home. She comes out like an hour later. She was in her room. She goes, I know one of the girls that got puked on. She's like, she's not doing well. And I'm like, oh my God, their generation, they can't handle anything. Okay. They seriously cannot handle anything. She's not doing well. What is she not going to make it? She got puked on. I think pretty much everybody of the 1960s and 70s generation got puked on at least once. It's good stuff. Anyway, had to share that with somebody, and so I decided to share it with about 2,000 people on here. Oh, that happened. It was not good. Not good. Not memorable. Don't want to remember it. But that's actually seared in my memory because I've seen some funny things at some live events. I never seen that. Been to thousands of live events. I've never seen that one before. It was quite impressive. All right. With that, stay tuned. I'm going to bring on Jeff Bierman here just momentarily. Thanks, everybody.